A trend has been developing lately in the world of money management, hedge fund firms rolling out mutual funds for the retail investor. The latest is a series of momentum funds from AQR Capital, the firm run by Cliff Asness. Brendan Lothry is with one of the people responsible for bringing these new funds to life.
Yeah, Mike, let me tell you right away quickly first that this is one of the big things that's actually happening in the mutual fund world. Hedge funds coming into mutual funds. Momentum funds have actually been around for some time, but here's a new element being added to this strategy. AQR Capital has come up with a number of indexes designed to capture the returns of stocks that have had a positive momentum. So for more on the funds and the indexes, let me bring in Tobias Moskowitz. He's a professor of finance at the University of Chicago Booth School of Business and a consultant to AQR Capital. He joins us from our Chicago newsroom with more. Toby, thank you for joining us today.
Thanks for having me.
Yeah, first of all, just describe briefly, what is momentum investing?
Well, momentum investing, it's a systematic strategy where you're just looking at relative performance, past performance. So the idea is it's actually very simple. If you just rank individual stocks based on their relative performance to other stocks over around a 6 to 12-month horizon, and that relative performance tends to predict future relative performance. So over the next 6 to 12 months, the relative winners from the past will continue to be relative winners, and same with the losers. The relative losers will continue to be relative losers. It's a relative strength strategy.
Doesn't this kind of fly, though, in the face of the efficient market hypothesis? You're actually saying that price persistence is both explainable and exploitable. Is that correct?
Yes, yeah, it is. There's a lot of evidence on this going way. We've got 80+ years of data that also works out of sample in other international markets, other time periods, other asset classes even. And you're exactly right that people talk about market efficiency and love to point to episodes like the tech bubble in the late 90s or what we've seen recently in the last 2 years. Those are infrequent and relatively short-lived. Something like momentum that has so much evidence and is so simple and seems to work so consistently, to me, that's one of the biggest challenges to the efficient markets hypothesis. Now, having said that, there are plenty of academics, including myself, looking for explanations for this, a lot of which are on the behavioral or inefficient side. But there are, of course, people looking for risk-based stories for this. Just so far, those have not panned out.
And you're talk about performance-wise. You said you've got data going back 80 years. How is this momentum data compared to against, let's say, a cap-weighted index or a fundamental-based index in terms of performance-wise?
Well, that's actually one of the reasons that people get so excited about momentum, both on the academic and the practitioner side, is the outperformance is really large. So what we're talking about over 80 years, what the academics do is they look at long, short strategies, but you're looking at something that's market neutral that can deliver gross of transactions costs on the order of 9 to 11%, around 10% per year above the market. Now, more realistically, you're talking about when you do this, taking into account trading costs and everything else, you're looking at anywhere from 300 to 400 basis points above market returns for slightly larger volatility, but pretty similar. It's got sort of the same. Yes, go ahead.
Well, Toby, this is Mike, and I was going to ask you if you could walk us through how the indexes are constructed.
Well, so what AQR does, and of course a lot of the details you can find on AQR's website. I'm more the research guy, but it's a very simple and transparent index. The idea is literally just to rank stocks on their past 12-month returns, and then you're basically going to rank stocks in terms of their market capitalization. Say take the top 1,000 stocks. And then just take the top third based on their relative performance over the last year, and then weight them cap-weighted accordingly. Very simple, very transparent, and yet that will, there's a long history of evidence that will outperform the general stock market, and in particular, it's a very nice combination with value investing.
All right, Toby, thank you very much for being with us today. Sounds like a very interesting thing, and we thank Brendan Lothry as well. We're going to have to check out some more momentum investing indexes, Brendan.